Gonna crash. The stock market is gonna recover. It's gonna be a hard landing, a soft landing, no landing. I know this could be confusing, Chad, but in the midst of all of this drama, one of the safest investments for 2023 has emerged, and that's what we're gonna talk about today. So I'm gonna tell you right off the bat, it's not lucrative. It is definitely adequate, and that's gonna be key as we bring it up here. But most of all, we now have an alternative, and you are not forced to go chasing after crazy investments. You don't need to learn how to use a crypto wallet. You don't need to do a lot of it. The best part about it is it's super simple. And what I am talking about is cash. Now, I'm telling you, stick around. You're going to learn stuff because this word cash, it's not what you really think it is, and there's actually more to it. So what is inspiring this video is this play right here, BIL. You can see by this chart, it's a weird looking chart. This one's an ETF, but we made this play at the beginning of the month, and I was very pleasantly surprised to see shortly thereafter, you're hearing a bunch of record inflows into cash funds and outflows in equity. I'm sure you've heard this before, headline about equity outflows and all of that. Well, they're talking about this, and then shortly thereafter too, you're hearing about the banks raising their CD rates, and this is all part of it. But the point I'm trying to tell you here now is that the day and age of low yields, it is gone, and that means you are not going to miss out, and it has created a very wild and valuable opportunity for your cash. So let me get right into it. Hopefully you like the video, drop your thumbs up, all of that. Like I said, you're gonna learn something, but like I'm talking about right now, we are talking about cash as an investment, and I'm not talking about your dollars. Do I have money? I don't know if I have money. I don't have money. I usually, can I cue some money in? Okay, anyways, but the thing about cash is short term, or it's a short for cash equivalents. That's what they say on Wall Street. Believe it or not, any sort of assets that is fixed income and returns you back your money in less than 12 months, that is called a bill. That's like a treasury bill is less than 12 months. That is what they mean by cash. When you see people saying, oh, a record inflow into cash, it's not like people just sold their stocks. It's meaning they sold their stocks and then bought assets that have less than 12 months of duration and have ample amounts of liquidity and all of that. It is a cash equivalent. So that's what BIL is. That's that first play I showed you. It is a 1 to 3 month bond treasury ETF, and a 1 to 3 month bond, it's very short maturity. It pays out a yield. It's pretty much risk-free since it's with the government. That is referred to as cash, believe it or not. Now, why this is so important, especially right here, right now in 2023, it's very simple. The rates are higher than they have been in decades, and you are now getting over 4.5% on any short-term capital. And if you've watched the Fed with us and you're a part of all of this, I'm sure you've probably heard something. We are going to raise rates, and we are going to raise rates higher for longer. That is what Jerome Powell keeps saying. So if the rates are already high right now, this is a very unique opportunity, especially with markets being volatile, because that means you will be able to get for the next 12 months a very good yield on your money, pretty much 4% all the way up to 5%, maybe even higher depending on how this year plays out. And you get that for doing nothing, risking nothing, and it will at least give you a better return if you're trying to invest in your waiting. I mean, that's word to the long term, baby. You know, we built this up throughout time, but we did a lot of waiting, especially last year. And just take a look. We started off this year, you went up 30% on a lot of equities. Within a month, you dropped down another 15%. If Powell or anything else gets worse, things could start going down again. And this brings up the element of risk. And this is why I'm saying this is the safest return. But now that it's paying 4.5% and maybe even higher, this is insane. I don't know if you guys get it. Go watch my old videos from like 2019. We're talking dividend stocks and all of this stuff. I'm saying 3 to 7% yield on a dividend stock. You could get that doing nothing now. That's absolutely insane. So at the very least, like I said, you don't have to have FOMO anymore. You have an alternative, and this is the best thing you could do instead of waiting or until everything smooths itself out and it becomes very clear the bull market is back on, and then boom, you could easily pivot into the next thing. So hopefully this little introduction gets you ready to go with all of it. But I'm gonna just tell you right now, the first thing you need to do, and this is what I had to do, and I hope you do the same, but you need to check how much you are getting paid on your brokerage for any unused cash. I'm telling you, this is what people are going to start doing, and everybody's going to start looking into this, especially if rates keep going higher. That's why the banks are going to respond and raise all of these up, because now that cash is becoming pretty much almost as attractive as stocks. This is going to be its own little competition. So the first thing you got to do is go check right now how much your brokerage is paying on unused cash. If you're already getting a high rate, like I know Interactive Brokers, Fidelity, even Robinhood Gold, they are paying 4% on unused cash. You don't need to do anything, and that's beautiful, because if you already have your money sitting in a brokerage where you make your investments and it's paying you that amount on unused cash, whether it's through cash alone, a money market, you don't have anything to do. You don't need to do anything. Boom. You're already taking advantage of it. Good for you. But if not, like I went and I checked my TD Ameritrade and I found out they are only paying 0.35% interest on unused cash, while interest rates are at 4.75 right now. I know it's wild, but if that's the case now, then we start looking into these cash management solutions. So like I showed you, I went with Bill. It pays about like 2.75 to 3%. It is variable. The dividend pays out monthly, and the whole idea is you buy it at the beginning of the month. Even how you see how the chart moves like that, it's orderly, and this is for a very specific reason that makes sure that you are catching the yield. So this is a cash management solution. There's names like Bill, SGov, SHC, GBill. There's even one more. There's actually a ton of them, but what I want you to notice is, do you see how this is like this like weird diagonal lines and they're just doing their thing? That is the whole point of all of it. Not only do you get the dividend yield, but you're gonna get small gains. But the idea is, with this type of movement in the ETF, it is designed to preserve your cash value. The whole idea is if you buy it today, even at the end of the month, that value on the equity, whether or not you're gonna hold to get the dividend or not, it shouldn't change too much. The idea is to represent what your cash is worth, and that's why the asset price is relatively stable. So with that being said, the whole point with all of this is simply to be able to have a better alternative than letting your money sit there or taking risky investments. You can still make 4.5%, 5%, which is an extremely good yield. I hope my GameStop people out there, and any, just don't balk at the small, don't despise the day of small beginnings, okay? But the point is, you could keep your cash liquid. You have a better alternative. And like I just said about liquid, it is liquid. So in my sense, why I'm using Bill, I found out TD Ameritrade only pays out 0.35. I was like, okay, I could get a higher return with Bill, but now I know my capital will be preserved pretty much. This stock shouldn't move more than 10, 20 cents, even on 100 shares. That's not going to be a big amount of money. And if anything, it's most likely going to yield me more money, but now it is fully liquid. This is all in my long-term account. So in the click of a few buttons, if any stock I want, any of the dividend names I want, any of the growth names, they come down, the minute that comes down in price, I could instantly exit out of Bill and get right into the stock I wanted while making sure I got paid in the meantime. So I think it's pretty simple. I encourage you to look into this. Obviously, this is just a basic introductory thing, but like I started off in the beginning, I'm telling you, this is going to become the safest investment of 2023. We're coming off a huge year of a lot of risk. Even this year, you're watching the flip-flop already, but the one thing that is emerging, it is these rates. And I'll tell you this is what the Fed wants. This is the whole idea of having high interest rates. If Powell's trying to cool demand, they want to tighten up financial conditions in a weird way. If a lot of investors, especially big money and more conservative investors, if they're sitting there and they're like, wait a minute, I could go and get 4%. Why would I deal with these 10, 20% swings? And I'm telling you, a lot of people are realizing this now. This would help achieve the Fed's mission, because then people will go into the bonds. It'll protect them with their QT, make sure things don't get disrupted too much. But mainly now, it'll take money out of the stock market into cash. But best of all, you're getting paid for it, Chad. So This is huge. We've talked about it a lot. I really hope this helps. Like I said, we added it to our long term, and we're going to use this until we find the play we want, because we've been stacking up a lot of cash. So when this type of historical environment is paying this much in yields, we got to make sure we don't miss out on that and don't need a FOMO anything else. So Chad, I love you. God bless you. Let me know if this helps. If you have any questions, put them below. I will answer them, and I'll see you in the morning tomorrow, baby. Let's go. You can't even, y'all see that? Oh no. It's like Heat, baby. We got to win the championship, son. And I'm standing up. I wanted to do a stand-up video. Okay. Am I talking to him? Okay. I'll see you in the morning. Horn.